Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by John Plueger. John is the CEO of Air Lease Corp. He is joining us for the purpose of our Aviation Leaders Report 2025. And we're recording this in New York in mid-October. John, thanks as always for joining us.
You bet.
Before we get into the meat of the conversation, would you mind telling our watchers, most of whom will know, but a little bit about ALC?
Sure. Well, ALC was formed in March of 2010 by Steve Hawsey and myself. Of course, we were at ILFC, Steve founding ILFC in 1973. Had a great start in March of 2010. Delivered our first airplane in April of that year. And then a year later, lo and behold, our investment bankers told us they thought we would have a good run for it if we went public. So in April of 2011, we did our IPO on the New York Stock Exchange very successfully. By that time, we had ordered a bunch of airplanes from Airbus and Boeing, and at that time, Embraer as well, and ATR. And so we started our order stream at a very good time when it was a disturbed time in the world. It was right after the 2009-10 financial crisis. The manufacturers were hungry. We were able to get in there, secure some great long-term orders. That's our mantra. We are a new order book lessor of our own orders, which now go out to 2029. So currently, as of last quarter, we ended up in our active fleet right now, about 500 aircraft, about another 300, just under 300 yet to deliver through 2029. So that's it. We're an order book lessor. We focus on the newest, youngest, most technologically advanced aircraft.
Excellent. And maybe we'll start off on the customer side.
Sure.
Can you talk to us a little bit about how you've seen the demand environment evolve over the course of 24?
Yeah. Well, the demand environment has continued to be strong, and I would say even strengthened even further on the wide body side. Brought about by most of the situations where everyone is familiar with. The production constraints from the manufacturers, Boeing and Airbus, not meeting their aspirational production goals and targets, compounded by the various problems with the newest technology engine. The Pratt & Whitney Gear turbofans, the LEAP 1A, the Rolls-Royce power plants have all had teething pains, obviously, and in many cases it's resulted in aircraft having to be down prematurely for inspections, large amounts of aircraft, lengthening times in shop throughput and that sort of thing, all contributing overall, combined with the snapback in global travel that we've seen post-pandemic, to one thing, which is a shortage of aircraft. And so on the one hand, that's good for lessors, asset investors like us, not so good for our customers. And the truth is, I would actually trade off a little bit of that demand for better stability, because every quarter, in our earnings calls, I'm having to say, well, we've had more delays and, et cetera. So I think the industry is begging for a bit more stability, to be honest with you. And now, of course, we have this Boeing strike, which has really put a damper on the MAX deliveries. So all of these factors have contributed to a continued shortfall of aircraft. So I would say the demand environment at this point remains very strong. It has continued to. And again, over this past year, the wide body demand has really strengthened quite a bit.
Yeah, and I'm going to come back to that supply constraint point in a moment. Just before we do that, as you look out into 25, I mean, there's always macroeconomic and geopolitical concerns.
Yes.
Do you view those as particularly heightened, or is it, look, this is just things you deal with and always have dealt with?
Well, I would say that, look, given what's happened with Russia and the Ukraine, the Middle East with Israel, we are at the highest levels in our boardroom spending a lot more time on geopolitical risk and what this all means. We have a huge upcoming election in a couple of weeks in the United States. This could have a significant impact on a lot of different aspects of the airline industry, on the debt capital markets, a lot of other things. So I would say we are living in more uncertain times with these matters. Now, whatever comes to us from the election, we've been running our business for 40 years. We've dealt with many different administrations, so I'm not overly concerned. But there's questions about, to the extent tariffs may be invoked within the aerospace sector. I think that's speculation. I just don't know. So, bottom line, yes, I think we are in a time of heightened geopolitical concern. We are spending a great deal of time about it, adjusting our fleets and our forward outlook accordingly. But having said that, we are still enjoying record travel above what IATA had forecasted for 2024. That looks to continue into 25, despite some relatively recent past 6-month, 8-month profit warnings by some of the airlines that have been chasing capacity. Fundamental demand is still there.
Yeah. And maybe bringing back then to the supply side piece, as you mentioned, you guys have very significant order books. Just how frustrating has it been on the slow ramp up of production? You mentioned the Boeing strike. Hopefully that's a short-term issue, but a longer-term challenge in getting those production rates up.
Yeah, it's been a big frustration and a big challenge. Look, you know, the majority of our airline customers, for example, are in the Northern Hemisphere. And for those customers, they are focused on supporting their summer travel, especially their seasonal travel. And we've had so many that we're supposed to get aircraft before the summer of 24 or before the summer of 25. And those plans have gone away because we're not able, manufacturers are not able to deliver those aircraft on time. And so, you know, it's constantly having to have these situations with your customers where you know, at the end of the day, if you order an airplane to be delivered in March of 2025, you want it in March of 2025, not in September. So this has been I would say, a perpetual slow bleed, if you will, of cascading, lengthening of delivery delays. These days now, but for the Boeing strike, put that aside for a second, you know, 2 or 3 months here, another month there, 3 or 4 months there. But we still have a situation where many aircraft we ordered for delivery before summer season are now not going to be delivered until the 4th quarter or the 3rd quarter in any given year. And then compounding that with a shortage of aircraft, we are trying as hard as we can to find additional aircraft, used aircraft, other things we might be able to manipulate to help our customers, because everybody is screaming for airplanes. And that's a good position to be in, and yet it creates its own sense of havoc. You know, we had so many customers that, you know, have already told us in advance, our lease is supposed to expire with you next year, we're going to extend it, we're going to have these discussions. And so now we are north of a 90% rate of lease extension on our fleet overall. And historically, that number on a first run brand new airplane has been about 70-75%. We are well north of 90%.
And presumably those extension conversations are happening at a much earlier stage.
Yes, much earlier stage, absolutely. Yeah.
And just the last point on the supply side piece, how do you see it uncorking? Is this just going to be a problem we're going to be living with for a number of years, or what's your perspective?
Yeah, look, it's hard to speak long-term in this industry. When I say long-term, like 10 years, but certainly we are in this environment, at least in my view, for another 2 to 3 years. Some of it will depend upon how quickly the engine manufacturers can modify their power plants, that some of these metal powder coating inspections are all done. It takes some time to crank out. But these issues are not unique to any one engine manufacturer. All the 3 main engine manufacturers have had problems with the introduction of the new power plants. So that I see taking 2 or 3 more years to work through, and until that, aircraft are going to be down prematurely. They're not going to meet their the engines are not meeting their on-life expectations. This is at least another 2 or 3 plus year situation, and then hopefully the Boeing strike gets resolved sooner rather than later. You know, no one knows there, but you know, a 2-month strike does not necessarily mean a 2-month delay in MAX deliveries. It's normally much longer than that in a recovery time. So it's an unfortunate development, but we are hopeful that through efforts on both sides, there will be a resolution, and Boeing will be back up to speed, you know, on the MAX production.
And then you talk to a supply-constrained environment, demand being strong, the correlation is lease rates going up. Can you talk to us about how you've seen lease rates evolve?
Yes, I mean, we've clearly stated on our last number of earnings calls, lease rates are progressing up. Now, there's still a lot of lessor content out there in the world. Lessors control about half of the world fleet. So we still have competition for the benefit of our airline customers. But even with that, having said that, clearly lease rates continue to escalate up. But yet, if you look at them related to interest rates, there still remains a lag time between interest rate increases or decreases and how that's reflected through in lease rates. The biggest driver of lease rates in any given day is supply demand. What's out there? What do you have that maybe somebody doesn't else have? And so I would say lease rates primarily driven, first of all, by the marketplace, but then secondarily by interest rates, which we all have to pay. Over a year ago, people were forecasting 7 Fed rate cuts in 2024. We've had 1. And now, given the strong economic data that comes out, it looks like the pace of Fed easing or further lowering will be a little slower. And so we look at our business and fund it, with a long-term perspective. We're investment grade. We're an unsecured borrower. We fund our company, not individual aircraft deliveries. We take a large view on how much debt we need to take on in any given quarters and years, given our deliveries. So that we don't really change that much there. Sometimes we may alter the tenor of the debt a little bit, but the overall planning and how we conduct our debt issuances and what we use really hasn't changed all that much. We simply, we have the ability, we're all leased out, for example, on our wide body aircraft. We already know what the lease rates are going to be on those deliveries. We're well leased out through the most of 26 on our single out deliveries. We know what those lease rates are. And so we just somewhat adjust our sourcing of our debt, whether it's in the public markets, whether we use our $8 billion bank facility. We did the industry's first, I think, for a Westerner, Sukuk bond issue this past year that was very successful. We see tremendous appetite remaining for that type of transaction in the Middle East. We've had a tremendous resurgence of interest from Asian banks over and above our bank facility. So, it's not hard. We are picking and choosing our most efficient and lowest cost sources of financing looking out over the next year to 2.
Yeah, and can I get your assessment there? Because as you say, you can tap multiple sources active in the unsecured market, the Sukuk piece, term loans. Can you talk to me about your assessment on the overall health of the aviation debt market?
I think it's been actually very robust. Despite a higher interest rate environment, in that context, everybody's living in a higher interest rate environment. Debt capital has not been a constraint, really. It may be for some smaller lenders or some smaller lessors that are dependent upon secure financing or bank term loans, but we've had such overwhelming support. Globally, from the bond markets, from the bank sectors, that I think it's been remarkably strong. And I think the great story there is that we are selling a large number of aircraft. We are realizing healthy gains. Our buyers, which tend to be mostly other lessors, are having no problem getting financing for that. So the debt markets are there, and the ABS markets have started to make a comeback. But I think overall, there's no shortage of debt capacity for our business and for aircraft investments.
And you mentioned the trading environment there, and as you guys are very active sellers of aircraft. I think if we were having this conversation a year ago, one of the words I heard around the trading market was stodgy. We weren't getting back really to levels we'd seen pre-pandemic. Have you seen an uptick in trading, and what's your assessment on that market?
Absolutely, yeah. We really turned back on the trading spigot, if you will, in 23, and it's continued into 24, when we were selling circa $700 to $800 million worth of aircraft in a given year. Now we're at $1.5 billion, $1.6 billion levels. That looks to continue well into. We're signing deals even now that are probably going to close in 2025. So the trading volume has been robust. It has increased quite a bit. And again, because there is availability in the debt capital markets for some of the smaller lessors or other investors that want to buy our aircraft. And so as a result, we've been able to have a very successful aircraft sales program. That looks to continue for this foreseeable future as well. And so we are taking advantage of that. We're harvesting gains on our fleet. We are continuing to evolve our fleet into the almost all next generation new technology aircraft, which we fundamentally have always believed in, and that's been our business model. So it's been a robust trading environment.
Yeah.
I keep saying that word, but it's accurate.
Yeah.
And I see that continuing.
Yeah, no, it's a positive to see.
Yeah.
And if I can get your perspectives maybe on the investor environment then, John, have we seen any evolution or change around the nature of the investors that are attracted to aviation finance?
I would say, yeah. I mean, if you look in the past year, year and a half, even more, I think that we continue to see growth in interest and appetite from some of the larger private equity firms. You know, Apollo's been in the space already, but there are a number of others that I'm sure we and others are being approached by. Pretty significant dollars. Aircraft still are a very good investable asset class. They withstood the test of time in COVID and other, periods of difficulty, commercial difficulty. So, if there is I would say a change or expansion, we're just seeing a lot more interest from larger private equity funds.
Yeah, and your perspectives on, you talked about aviation as an asset class. To your point, you've had COVID,
Yeah.
probably an outsized impact from
Yeah.
Russia, but incredible resilience in the sector.
Yeah, absolutely.
Can you talk to me about how, in your view, aviation stacks up as an asset class?
Well, I think the gravitation of investors to our space continues. And so therefore, by definition, they view it as a very attractive asset class. All these things I mentioned that have led to the shortage of aircraft are none of it is going to be fixed short term. So this is with us for a while, and so it's of no surprise that you have some additional very serious money looking to come in and continue into this space. I mean, aircraft supply into the global marketplace, new aircraft, is limited. It falls far short of demand today. I don't know when that's going to, I'm sure it will reverse at some point in time in the future, and I think that will happen inevitably. But still, it's not just the last 2 or 3 years. When you look over the past decade, the last 10 years, the last 15 years, the last 20 years, I think a very attractive aspect of this business and of aircraft business is that the story has largely been consistent and the same. Aircraft have turned out to be a good, investable, hard, real asset. And these assets, unlike a commercial building somewhere, they're mobile. If they run into trouble in one location, you can move them elsewhere. Okay, it might be tough, or you might run into some obstacles, but at the end of the day, the asset is portable. And you can put it anywhere in the world. So maybe ships are like that, maybe rail cars are like that. But I think that's one of the fundamental strengths of aircraft is that they are movable assets, and they are resilient. And it's not just the past several years or the past 5 or 10. That's been a consistent story for the past 30 years plus. So in terms of the durability of the strength of the asset class overall, you can look back historically and say, it's been strong. It looks strong. Yes, of course, there have been periods of time, 9/11, where a year or two, okay, things went soft for a while. During COVID, we shut off largely our aircraft pipeline because we didn't need to sell, and airlines were questioning whether they could turn on the lights tomorrow. So there have been short-term periods of level off, et cetera. But well beyond all that, I would just say, is the durability and sustainability of that asset class.
And maybe more broadly looking at the leasing market, can I get your perspectives on the importance of scale? And scale in any business can offer you benefits. Do you think the importance of scale is increasing in aircraft leasing?
Well, I think there is a natural tendency, and I think we probably made the same comment last year. I think you will always see some consolidation going on. I think that is just going to stay with us in the leasing community and others. I think that will continue. Having said that, yes, I think what I would call basic scalability is an important feature. We feel we have very sufficient scale and size. We don't feel we're handicapped in any way by not being as large. We have one of the world's larger order books of aircraft. And so I think our customers see us as a large aircraft lessor and a supplier. It gives us the benefit not just on the single aisle space, but on the twin aisle space, where I think we probably lead the others in terms of our orders for twin aisle aircraft, the fleet makeup. That's a much more important component these days of the global marketplace. So I do think you do need a basic level of scale and size if you want to really expand your global footprint. Having said that, I'm very comfortable where we are. We have a nice growth scale. We can be hampered in that by virtue of our business model if we don't get our deliveries, if we don't have enough capital expenditures, if we don't spend as much as we forecasted we were to the street. But overall, again, big picture, it's a good inflow, it's a good growth story for us despite Boeing strikes or Airbus delays, and we've been able to consistently demonstrate that. And that comes from size and scale, which we initiated when we first started our company. So I think you need to have a certain fundamental level. I can't tell you exactly how many assets that there are, but you have to have customer breadth along with that. I think we have that scale, but I think, yes, if you really want to expand your global footprint, you do need a certain amount of scale and size.
And shifting gears slightly, in an area we've touched on over the years in these conversations, John, has been around environmental challenges.
Yeah.
You've got a young fleet, you've got the most fuel efficient fleet that's there. But just curious, are environmental issues having any real impact on your ability to attract investors or price your debt?
I would say no. On the Wall Street side, on the debt side, we don't. I think for us, there is, to your point, an acknowledgement of one of the attractiveness of our debt securities, as well as our equity, is the fact that we do have a young fleet. There are no more fuel efficient aircraft in the commercial airliner space than what we were getting. So we don't get a lot of questions at all on that because that's what we do. And I think that is a part of our fundamental appeal. Now, other lessors might be getting other questions or pushbacks on that. And today, the airlines are much more concerned about keeping the aircraft they have, even the older aircraft, just because they need the lift. But big picture, it's undeniable the swing towards environmental sustainability on a global basis is here and strong, and will be an even stronger voice and force going forward. But truthfully, it doesn't come up a whole lot in our debt investor meeting, our equity investor meeting. And again, because as a company, we're already there. We're doing what we can.
Yeah, no, I think very logical. Excellent insights as always, John. In closing, a question I always like to ask, as you're looking out into 25, what are your optimism levels like?
Very, very optimistic. Again, we are in a prolonged, very strong aircraft demand environment. That's good for us. I want Boeing to get back on track. Everybody does. This industry relies on a healthy duopoly. Yes, it's Boeing and Airbus. There's Embraer, there's ATR, there's other, but the dominant suppliers are a duopoly. We need Boeing to find its footing and to get back to health, to get back to the quality levels that they very much want, which our customers want, including us and our airline customers. So all eyes for the time being kind of on Seattle. Hope they get over this labor issue. I have great confidence in Kelly Ortberg that he's got a good command of the company. He has been a very quick study. He knows the issues. I think he's got plans afoot to address them. And so that will make all of us, I think, feel a bit better as we go out and look into 2025. Airbus continues to work towards our aspirational production goals, which they need to do. I think I and along others would just caution, be careful when you're keeping the throttles at 110% all the time, lest something goes wrong or go by the wayside. And I do think Airbus leadership is mindful of that. They need to be focused on their quality. But I think we are all looking for a return to health for the Boeing company.
Listen, John, on that note, I'd like to thank you again for your time and insights and wish you and ALC a very successful 2025.
Well, thank you very much. I always enjoy it. Thanks. Appreciate it.
Cool.
Okay.
Thank you.